try to say anything more on this topic, public versus private money, having a professor on the panel here with Fabian. I think you are known for having opinions, which is a good thing, but the panel is 35 minutes, so please, for the first 2 minutes, restrain yourself. Opinions can come later. And just give us a first dive into what we're actually talking about here in terms of public versus private money.
So I guess you want a textbook definition then?
I'm an economist. I would love to learn something by heart, which I can then pass on to my 19-year-old son, who's right now studying economics. So I'll give that this evening to him, saying, this is Professor Scher's definition, learn it.
I think, in the textbook, and I don't think that's the most interesting thing, but it's certainly good to set the stage.
Yeah.
Public money is issued by a central bank in some smaller denominations. It can also be issued by a government, for example, with coins. And it's legal tender, right? And that's really important. I think we'll come back to that later on. Whereas private money is issued by commercial banks, by private financial institutions, and the important distinction there is, of course, you have some risks, some additional risks associated with it. Now, I don't necessarily agree with some of the statements that public money is risk-free, because clearly it's not. You still have inflation risk, for example, but you don't have the additional credit risk. I think what is much more interesting than textbook definitions, and there we already might have some controversy. I'm not sure if I like the word or the versus in the title, because it's not that clear whether these two things are substitutes. They could just as well be complements, and I think we will also come back to that. And then maybe one last thing, and then I will stop. When we talk about these various different kinds of money, it's super important to be precise. And I think when we talk about stablecoins for today, we exclusively talk about off-chain collateralized stablecoins. That's my understanding, and I think we're probably in agreement. And for CBDC, we have to be very precise whether we talk about retail CBDC or wholesale CBDC. Precisely.
And that is probably still the tip of the iceberg, but I'm very happy that I didn't invent the title of this topic, because otherwise I would already have an issue with you. Oliver, so you are basically then presenting the public part together in a way, of course, with Fabian, but he's from university, so let's see that as something in the middle for the moment. But what is your take on the topic of our panel today, and where actually do you see the role of the public side in it?
Yeah, so of course it's a coexistence, and public and private money have coexisted, and they will coexist also in the future, even if financial markets change. Now, let me provide very rough numbers on the Swiss financial system and the role central bank money plays as an anchor in the financial system. In Switzerland in 2023, in total, roughly 78 trillion were settled in Swiss francs. Out of these 78 trillion, 75%, or roughly 55 trillion, was settled in central bank money. So that's in terms of the value. If you look at it in terms of the number of transactions, then the share of central bank, the importance of central bank money slightly decreases. It goes down to 50%, so there is a lot more private money used. It's commercial bank money mostly. But still, central bank money has an important role. And I'm sure that central bank money will keep its role as an anchor. First, there will be demand for safe and efficient settlement in financial markets, and it's the only asset, and Fabian alluded to it, it's the only asset that is free from credit risk, but it's also free from liquidity risk, right? And so there will be demand, and second, central banks, if financial markets change, will adapt. They will continue to provide monetary and financial stability, even if infrastructures, technology, whatever changes.
And how that works in detail, we will explore in part throughout this panel. It has been a nice feature of this panel, of the setup from the team, to put Lily on the other side of the panel, because, of course, you're not opposed in any way, but whereas I would say Oliver is the public representative, you would probably, from your Solana perspective, more represent the private side, and then, Jose, we will define your role later in this discussion here. Lily, from your perspective, you've heard what has been said. Where do you position the private sector and specifically your work in this spectrum?
Right, well, Solana, like many blockchains, open source infrastructure. And I consider that open source infrastructure to be neutral to all assets. And so I think it's what we're focused on is not so much on the characteristics of one type of asset versus the other. The idea is that this would be a platform for which all financial assets, which would definitionally be larger than the total number of amount of assets that are in the traditional finance system today, to be potentially made available and even more useful in a blockchain setting, right? And so I think that this infrastructure can be a substrate for central bank issued assets. It can also be a substrate for, typically when people talk about money, we imply that it's kind of stable coins. But what I think that this open source infrastructure does is it provides some even more fundamental innovation around, well, if money is to pay for goods and services, well, now that money has become data and you're paying with a token rather than, for example, a cash bill, then the nature of that actual transaction and the immediacy of liquidity and on-chain capital markets 24/7, all the rest of it, fundamentally changes what you're actually paying with, right? So to me, the public money, central bank issued assets are one type of asset, but really we're sort of vectoring towards a world where all of this kind of different types of assets are being collapsed together. So you could be in a position where you're paying for your coffee with the dog coin, and in the background, that's being settled into CHF or USD of any matter, right? So I think it fundamentally changes what we consider to be that financial instrument we use for transactioning goods and services.
I think that already alludes to a very important aspect, getting us indeed rid of the or the versus, or looking more into the different layers of these systems. And Fabian, I know that you have a lot of things to jump in and discuss, but I kindly invite you to listen to a little bit more of statements and then really wrap this up at a certain stage, because I'd be curious to learn what José is thinking about that. And I was reflecting on the position of PayPal actually in the spectrum. I mean, you're of course representing the private spectrum. At the same time, I know from our discussions that you do not think in these simple terms of public versus private money, but there are different forms of private money. Also, PayPal is now working, I would say, on new solutions. Can you introduce us to your thinking about this?
Absolutely, and yeah, our role in the industry is, depending on where you are, when I go to bank conference, we are the attacker and we get hit, and when I go to crypto conference, we are the incumbent and we get hit, so it's an interesting place to be. Yeah. I take a lot of issue with the versus in the title, because I think there's a narrative that plays in the media, but it's not very helpful. Mm-hmm. Private money, so commercial, to be precise, as Fabian says, commercial bank money and central bank money have coexisted for many, many years, at least 500 or so, and it will continue to coexist. So when we got involved into the blockchain space was because we saw in the technology for the first time, definitely in my professional career, but probably in the last 40, 50 years, that there was something that would enable movement of value on radically new payment rails, and that required tokenization of assets, at least of three different types of assets. What in Europe is very well established as e-money, and in my mind, stablecoins are basically tokenized e-money. Bank deposits, and there's a lot of talk on the banking sector about tokenized bank deposits, and then obviously tokenized central bank money, which is CBDCs. Those things are not self-contained, so there is cross-pollination between them, and we were talking off stage that my contention is that it's very likely that in a few years we're going to see stable coins that are fiat-backed, but where the reserve is CBDC. Mm-hmm. Because I don't know any of the large CBDCs projects that are happening today where the central bank is thinking about deploying on Solana or on Ethereum. And there's value that has to be exchanged on those tokens. So I do believe that we will see a split of the role of the token versus the role of the reserve, and we'll see that moving between the commercial and the central bank money space.
I would rightly move that forward, Oliver, to you, because when we go deeper now into what you're actually doing, José mentioned this. It's very interesting that you indeed have your project, Helvetia, which you are working on. And how does that fit to the discussion we had so far, and what are you exactly doing? Perhaps also, what are the practical issues, perhaps bottlenecks that you are experiencing? So could you give us a deep dive, a couple of minutes into where you stand on this, I would say, leading project, at least when I look in Europe?
Yes, so I'm happy to provide an overview of the Helvetia pilot. So this is kind of the main initiative of the Swiss National Bank in the DLT space. So Helvetia pilot, in essence, is the provision of a wholesale central bank digital currency, or CBDC, on a regulated financial market infrastructure, and this it's SIX Digital Exchange, or SDX. Now, we are, as the provider of the settlement asset, we enable financial market participants to actually use our settlement assets, so the CBDC, to directly settle on that platform. And through that, we enable, we support the innovation efforts in the private sector to actually explore the added value of integrated settlement and programmability and everything that comes with DLT on the platform. Now, I want to stress that the pilot is really, from a central bank perspective, is a very big achievement. Because if you look at today's setups, today's systems, central banks typically control, or at least manage, today's systems where central bank money is circulating. So the large value payment systems are typically controlled by the central banks directly. Now on SDX, the wholesale CBDC is not controlled, is controlled by the SNB, but not the platform per se. So we move our control from the system level to the level of the token. And I think that should not be underestimated as an innovation.
I think that's a very interesting start of this discussion here. And I would like to have the, not only reaction, but also the positioning of both you, Jose, and Lily on this from the private perspective. We in the public sector, and I mean I also belong to the public sector, tend to think that it's a very important sign and a major step, and I completely agree to that, when we do certain things that take probably much more time than we have expected, but then we see also all the practical problems in terms of getting the right people, having the skill set ready, looking at the political environment, what you can do, etc. And sometimes I get the reaction from the private sector that according to them this takes ages, but we see every CBDC project basically is out there globally that is taking much more time to develop than actually people thought a couple of years ago. So would you see that, and I now massively exaggerate, as the slight movement forward of dinosaurs, or do you really see that this public sector dimension, and I'm not thinking that, Oliver, so no reason to believe that, but is that of relevance, and if so, how, what the public sector are doing, or are we somehow in a paradigm that, let's say, with all this nice technology, the private sector will get it right anyway?
You know, I think that it has moved at a certain pace, right? And I don't mean that as a critique. I think that's just an observation. And I think that it will have an impact in a couple of different ways. Certainly, if a central bank makes any product decisions or any indications, that will absolutely affect the commercial banking market in its immediate kind of sphere of influence, right? And so what I think that means is many of the things that people are doing now, right, which is very much in the direction of privately issued stablecoins, that landscape would change very dramatically if central banks were to get into the game. Now, in the US, right, clearly the most important currency market, there has been a pronouncement that there will not be a central bank digital currency. So that provides at least some sort of macro sort of certainty that this path that we're on will likely not going to change 180 degrees. And I think that whichever central bank were to do that would change very much the dynamics within that currency market. But I also think in crypto right now, because of the dominance of sort of trading-related use cases that prioritize unified liquidity as a first-order priority in trading markets, most on-chain, if we talked about stablecoins, tend towards the dollar. I don't know whether it's 98, 99, or even more than that market share right now. And so I think practically speaking, given what the US has indicated and the dominance of stablecoin volume and liquidity in dollars, then I think that at least will remain fairly stable for the foreseeable future.
Good that I'm not sitting on the panel because we would have an animated discussion, but I restrain myself. Jose.
When you're a central bank, you're operating on a risk envelope that is different than what you're operating in the private sector. So we were listening this morning in one of the first panels of the day about moving fast and breaking things. You're a Swiss national bank, you cannot break things. It's a good thing that you move fast if you can, but the prerogative is that you cannot break things because the changes that you are systemic. So I don't think that there should be a criticism on the speed. I think that the conversation probably has to do about direction of movement, and especially about what is the desired outcome. I think that there is an interesting conversation to be had on permission versus permissionless protocols, but also there's an interesting conversation to be had on retail use cases. So in my mind, the most interesting aspect of the CBDC debate is whether you're going to have a retail instrument or not. Because if it is going to be purely wholesale forever, we didn't really need the tokenization. There are going to be, I shouldn't say that, there are going to be marginal improvements to what you can do without tokenization, but the important aspect of it is, can this be a better instrument that you can interact with? Is there something similar to digital cash in the central bank construct? And we start to peel the onion on what that requires. Is a very, very thorny technical and political issue. So it will take time. So I think it's more important that we get to the right outcome more than we get there fast. In the meantime, the private sector will continue to do what the private sector does and hopefully innovate faster. But it is important that the central bank sphere goes toward the right outcome more than it moves at a higher speed than it can.
Jose, you mentioned one point which to me is very important, which is the demand perspective. So for whom are we doing that? I'd like to come to that in a second. But Fabian, now that you have listened to the various statements and that you have a bit of carte blanche now to develop your thinking on that basis, do you think we have identified all the right variables that play a role in this discussion here? Do you think that the terminology is appropriate as well? We had these discussions before for a number of years between us, and I see that every day in the European Union that I can't call stablecoins because politicians don't want them to be seen as stable. I cannot call programmable payments programmable because people don't like the idea of programmable money and things like that. So we also have these semantic aspects in there, but from the categorization and the mental structure of how to move forward in the discussion on how public and private money can meaningfully interact to serve the whole spectrum of demand, are we correctly positioned?
Yeah, I mean, it was a very short discussion so far, right? And I think we have identified some of the most important characteristics. One thing that is also really important to me is privacy.
Yes, thank you.
I don't think we have too much time to discuss that right now, but especially for retail, CBDC or stablecoins that are used in retail context, this will be super important. And you just have to be aware right now on public permissionless blockchains, when you're using a stablecoin, there is absolutely no privacy whatsoever.
Yes.
And yeah, we do work a lot with data, and it's sometimes really frightening to see the data that people leak on the blockchain, and it's not a good thing. So we need privacy-enhancing protocols. And the other thing, I mean, we've heard it clearly. The private sector is better at innovating. I have huge respect. I'm not saying that because you're sitting right next to me. I truly believe that the Swiss National Bank and also to some extent the BIS Innovation Hub, they have done some fantastic work in incorporating some of the ideas that originated from the blockchain space and experimenting with it. But in the end, the innovation will come from the private sector. So whereas the stability most likely will come from the public sector.
Yes.
And then one last remark, since I have a carte blanche, and we heard that already, it's the question of where you're issuing these currencies. And since there are huge network effects, when we talk about things like composability and atomicity, so that you can connect various of these payments and make sure that all of these sub-transactions are executed in just one single atomic transaction, there might be some network effects towards one dominant ledger. And I think central banks have to be really careful that they don't engage in the business of kingmaking when they're issuing CBDC, particularly when we're talking about a permissioned ledger like SDX, right? I think it's great what Swiss National Bank has done with a third-party platform, but I would argue that they need some more courage and also issue CBDC on something that is more neutral and ideally permissionless.
As you had carte blanche, I would give a joker to Oliver, because you can react to that, but you don't need to.
I must react to that.
Yeah.
No, so I see these points, but we also need to see where central banks are coming from. Central banks are coming from environments where central bank money is heavily controlled in their own systems. Now, this environment might change, right? We might issue central bank money eventually, maybe one day, on a permissionless platform, who knows? But for what I want to stress is that it's certainly going to be an iterative journey. Now, you mentioned our Helvetia pilot on SDX. I want to stress that we are not the kingmaker there. We have a requirements-based approach. We look into the infrastructure, we look on whether and how we can fulfill all the requirements that we defined internally to issue a CBDC, and that could also happen eventually one day on another platform. So we are by no means a kingmaker, and the last point I would like to emphasize here is that we are more in the role of providing the settlement asset to an infrastructure that may be eligible for settlement in central bank money, but we are not the ones that are shaping future markets. So there is no point for us in now moving forward and issuing a CBDC on a permissionless platform. There must be a need and a use case for that.
That relates to something that also Jose said, and I'd be keen to hear your reaction to that also, Lily, but allow me to also pick something up that Fabian said. And I'm very happy that you said it, and I knew that you were going to say it, because I'm always seen as saying that myself, that is privacy. I tend to get very often the question in interviews of what will you be your method of payments in 2030. This seems to be popular among journalists, and I always say it will be either cash or some privacy coin that is really private. And when we now look a little bit more on the demand side, and we discussed also indeed the various functionalities, retail versus wholesale, privacy also very important for the buy side, I would say, from the demand perspective, but also what industry really needs. To what extent in your daily work does that demand perspective really play the key role? And perhaps I'll start with you, Jose, from PayPal, because I mean, you have an established track record on being seen in many different quarters as a reliable service provider in that sense. So I think it must also be key for you to not only take the demand perspective very seriously, but especially also focus on privacy and data things.
Yeah, and we are in this space because we're a payments company. I think that very few people inside of PayPal are ideological in terms of the distributed ledgers and blockchains per se. It's a very hard-nosed approach to, we can move money now in a way that is 26 times cheaper than an ACH transaction, and we can move money in a way which is 400 times cheaper than a paper check, because I live in a place that still handles paper checks. So it's purely from that specific use case that we're interested in. Funnily enough, then the market does its thing, and it takes it, and we put the token out there, and the token gets used in places that we had not envisioned it would get a ton of adoption. So we are deployed now. We are, to Fabian's point on permissionless, we are deployed on both Ethereum and Solana. We made a very clear decision from the very beginning that there should not be, first, there should not be a PayPal protocol. It should be open source technology that is out there. Second, it shouldn't be permission, because if we were going to issue a token that was permission and require both actors to have a PayPal account, we have had that for 20 years. It's called PayPal Balance, and we didn't need to reinvent that. So we put it on Ethereum, we put it on Solana. And now we are finding that we are the fourth largest fiat-backed stablecoin in the world. But more important, I think there's a side on market cap as a vanity metric for the stablecoin industry, which I think is an artifact of how stablecoin issues monetize these days. We are less concerned with market cap. We are very concerned with on-chain transfer volume, because that signals that people are using the token for something. And we are doing now about 8 billion a month in on-chain transfer volume, a very significant part of that on the Solana blockchain. And we have seen 3 types of use cases on the demand to emerge. And I would say that I expected one of them, I expected less the other 2. We're seeing a ton of adoption on DeFi, which was surprising to me because we were not specifically catering to the DeFi audience, but there seems to be an appetite for well-regulated, transparent stablecoins, especially for folks, institutional investors that are active in the US. We have seen an increasing amount of use as an infrastructure settlement layer. So experiences that are fiat for the sender and fiat for the receiver, but get settled on a stablecoin layer. And then we are looking at what's happening on use cases where there is payment based on a stablecoin. The demand for consumer payments denominated in stablecoin, I don't think is there yet. We have been in this business for 5 years now, and I think that we are on year 5 of a 10-year journey. So moving the consumer from using their credit card and getting 3% cash back to using a crypto wallet with a stablecoin there, I do believe it will happen, but it will take time. The use case for payments where you start to settle wholesale payments denominated in stablecoin on experiences that don't have friction for the consumer, that's where we are seeing the biggest pickup. We do it ourselves, so we're eating our dog food there. I have the benefit of running the remittance business of PayPal, a company called Zoom. We are settling remittances with disbursement partners in a stablecoin. So the sender sends euro to the Philippines, the receiver receives Filipino pesos, but all that transactions settle in a stablecoin in a way that is transparent for the user. And I think that we will see that also in the B2B space. We are paying our vendors in stablecoin. And the moment that you can use SAP to pay an invoice in our stablecoin, then we can do it and everybody else can do it. So I think that very clearly adoption happens on the Web3 space. That's very established. I think that you are seeing encouraging signs of adoption on the enterprise space and for settlement. The consumer end, I think, is going to take longer.
Lily, you heard what Jose said, and he also referred to Solana. So that basically then when I talk about the demand side, that is actually a direct part of that question, noticing, of course, what is going on in the space, but also, of course, developing the infrastructure from an indirect demand side through, for example, PayPal, but also others where the request for services actually reaches you. How can I imagine that this works in practice, your perception of what form of money actually will be your priority?
Yeah. Well, I think our role in the industry is to think not just about asset innovation, but really product innovation and how you can use these assets where money now becomes data, right? And data has now become money. And so I think that, I've been thinking about payments for a long time in this space because, well, that's what Bitcoin said, peer-to-peer electronic cash system, didn't say store value digital gold. And I think that the narrative we're all very familiar with blockchain-based payments is fast, cheap, constant, 24/7 settlement, don't have to wait for SWIFT and the black box that your money goes through from point A to point B, especially if you're doing that internationally. And I think that's absolutely part of the story, but I think that blockchain, really any new technology has to deliver more value than fast, cheap, and constant. It's got to be 10x some way. And I think that what stablecoins do by providing more or less instant settlement, I think it opens up new profit pools. It's not just about cost savings. And so if you have this, let's call it a 3-day cross-border settlement period that now is essentially being reduced to practically zero. So on one hand, there's massive fee compression there, right? You might have paid Stripe 50 bips, sometimes much more than that, and now Bridge is doing it for less than 10 bips, right? So there's margin compression, but then there's also a new profit pool so Huma, for example, is a protocol in Solana that is allowing us as whoever to really LP into a pool and to accelerate that cross-border payment, and an annualized yields about 15%, right? So those are some of the new business opportunities that I think come up with this new technology. It's not just about faster, cheaper, constant, but there's actually new revenue opportunities in this. And those are the types of products that I think we're really trying to push the envelope on when we think about not just sort of asset issuance, but then what are the new things that you can do with these assets to make money more efficient, more usable, more accessible, so on and so forth.
Fantastic. And I knew that the question was popping up. It was 30 seconds earlier than I expected it to pop up, but I thank you that you finalized your thoughts. It in a way relates to what we have discussed 5 minutes ago. It's on retail versus wholesale CBDCs. So the question is, in the US, a retail CBDC has been ruled out as at the political level, but does that apply to a wholesale CBDC? The issues around privacy and programmability don't arise for wholesale, and central banks are committed to ensuring that large market transactions settle in central bank money, which doesn't carry credit risk. I think that's a neat summary, actually, of what we have been discussing here in large parts of the discussion. Perhaps in order to get an additional dimension to that question, and whoever of you would like to take this up, Fabian, you alluded to that. Retail versus wholesale CBDC, we also see that on the discussion on the digital euro. Basically, my opinion on a retail CBDC is a very critical one, I would say, because I wouldn't know how to use that for myself, given my preferences. Wholesale CBDC, I see a lot of demand, but I see also a lot of practical issues. I'm not referring now to what you are doing, but I see that in the European Union's on the test trials, etc., on finding in the public space the right people to program that. So can we conclude that this question, which is focused on the US, is basically correct? I think the picture is a little bit more complex given the federal and the state level of who is going to do what. But should we for the future really put retail and wholesale in different categories because they are so different stuff?
I mean, I'm not a US policy expert.
No, it is less on the US, but more on the...
I definitely don't know the answer whether it has been ruled out. I cannot imagine that it has. It would be very strange.
Yep.
The second part regarding privacy, I think it's a very nice summary as well. But there might still be privacy issues even for wholesale CBDC.
That's the interesting part. And so can you just add a little bit to that?
Yeah, I think as a commercial bank, you might not want to disclose all your settlement payments.
Yep.
In public, so arguably there's also some demand, even if it's not to the same extent, but to your holdings, to your collateral, but also to transactions. So privacy, even there in an institutional setup, will play a huge role.
I would agree to that, actually. So I think that's an interesting dimension that we don't talk about too often, and we can deepen that, of course, in a second in the Q&A bubble. We have about 2 minutes left, so I would like to have a very brief statement from you, also given that we have a lot of investors and otherwise interested people in the room here. For the next year to come, what is the one thing to watch in the space of public and private money? So what should we really keep an eye on when we look at perhaps... I'm not saying the fastest, but the most interesting market development. What would that be? I would start.
I think product innovation around payment financing. So we call it PayFi.
Great.
Mainstream use cases outside of capital markets. And a lot of what has been happening in the last year is native yield-bearing stablecoins. I'm not seeing anything that is happening at scale yet on payments, and we look forward to seeing that.
Fabian.
Well, in addition to privacy that I have already mentioned, governance. Governance on the token itself. So what are the restricted functions? Who is in control of that token? What can they do? But then even more importantly, governance of the underlying infrastructure and the platform, and who is in control of the platform where these tokens are issued on.
Perfect. And Oliver?
So I'm not from the business, so I'm not the best position to actually comment on that question. What I could say, like, taking a narrow perspective on the Helvetia pilot, I'm looking forward to seeing more activity in the CBDC with the use of the Swiss franc CBDC and to see an expansion of like use cases and an adoption in the Swiss financial system on the SDX platform.
You're such a disciplined panel that actually from the 2 minutes we still have 1 minute left. So either we could sing the national anthem. Actually, does the Engadin have a national anthem? Have to check that out. No, but we'll ask Nicolo. But I think that's too complex. I mean, all the stuff that we discussed is really easy, but probably that's the hard part, so we skip that. Thank you very much to our discussants, and now we have a break. So if you have further questions, please join us in the Q&A bubble to deepen the discussion. And thank you very much here. Give me a round of applause for me.
Thank you.